Hi, everyone. It's Arry, you chair of the Cascadia Blockchain Council and also your host for the Blockchain Underground and the Windshield Time podcast series, also on YouTube. On this episode, October 22nd, we had guest Jesse Proudman, CEO and founder of Makara, join us. It was really, really interesting. He talked about his background from BlueBox, getting acquired by IBM and his experience there. Starting Strix Leviathan and all that he learned from that process and journey, and we should let him to start Makara. Definitely check it out. I'm sure you'll find it as interesting as I did. And don't forget, we have these AMAs every Friday, 12 to 1 p.m. PST. All you have to do is go to meetup.com and look for the Blockchain Underground. And we also have a Slack community and a whole bunch of other resources. So if you're feeling lost or you want to connect with the community in blockchain and or crypto, we're here. Thanks and have a great day. All right, thank you so much, Jesse Proudman, for joining us for our community AMA today, October 22nd. Our community is so excited to ask you questions and to have this opportunity to chat with you. So thank you so much for making time on this Friday. A little gloomy, but our hearts are very full of sunshine seeing you. I guess it would be really great if you could kick off with a long form, like 5-minute introduction of yourself, like how you got into crypto, your background. I know you're a serial entrepreneur. How did Makara happen? The whole works.
Yeah, absolutely.
Back to you. Yeah.
Happy to do that. Thanks for having me today. So I am a lifelong entrepreneur. I started my first company when I was 13, sort of never had a job anywhere else. And so I was pedaling my bike around town, selling websites back in the late 90s. Like my dentist was my first client. From there, parlayed that into a company called BlueBox, which started off as a web development firm and then a managed hosting firm. Bootstrapped that company for about 9 years and used any and every kind of financing you can come up with to keep that firm alive. Credit cards, home equity lines of credit, borrowed money from friends and family, and the Small Business Administration. If you name a source of non-equity financing, I probably used it at the beginning of that firm. In 2012, we raised a Series A, led by Voyager Capital in Seattle, and we used that capital to go build a private cloud product based on a technology called OpenStack. Built that over 2012 into 2015, and then the company was acquired by IBM in June of 2015. Great exit for the team, great exit for the investors. Not a great exit from product longevity perspective. So we spent about 1.5 years at IBM after the acquisition, integrating the product into the broader IBM cloud ecosystem. And then there were some strategy decisions made that moved IBM Cloud sort of away from an OpenStack-based offering to a different technology stack. And so the product wasn't as useful inside of Big Blue anymore. And at that point, I found a role with IBM Ventures. Although I think it is funny, I believe, at least as of a year ago, I think there were still teams inside of IBM sort of using the tech in different places. So it's nice to see it live on to some extent. So 2017, I found a role with IBM Ventures. And right around that time, was my sort of first opportunity to actually go spend any time understanding what was happening in this landscape, in the crypto landscape. So ironically, I went to a small liberal arts school here in the Northwest called University of Puget Sound down in Tacoma, and was in a business program called the Business Leadership Program. It's about 30 students that go through a business degree as a cohort. And in that program, we had Eric Voorhees and Nick Carey. And so Eric obviously went on very early to get into crypto. And
wow.
A couple years later, he got Nick into it. And we're all close friends. So I've been following sort of their journeys since college, but never had the intellectual bandwidth to sort of understand what was happening. I think it's actually really funny. Back in 2015, I think it was right after the sale of the company to IBM, I had an investor call who was doing diligence on Shapeshift. I think they were looking at doing an investment. And we were talking about the asset class. And I remember them being like, I don't understand it. Like, what are people going to do with magic internet money? How is this going to help anything? Like, it just didn't make any sense. And I think it's funny it's this funny element that it takes some intellectual energy to really begin to understand what was happening here. And I didn't have that opportunity until 2017. So found this opportunity with IBM Ventures where they wanted to build an accelerator program similar to Google Launchpad or Microsoft Accelerator. And blockchain was one of IBM's 5 priorities at the time. And so I signed up to help design the accelerator and have really found an interest in the blockchain piece of that. And so my job effectively in 2017 was to research the broader crypto landscape. And that was the first time that I really understood kind of what was happening here. Oh, something just started. There we go. Music just started. I had to turn it off. And so it's the first time that I really had the time or energy or mental capacity to really spend understanding the landscape. And I was immediately engrossed. Just fascinating place to be. I think my career goes all the way back to the late 90s as the internet was sort of emerging and becoming sort of the platform that it is today. And this entire asset class really reminded me of that period of time where you've got a functional network, sort of a proven functional network, and all of the applications, the use cases, everything else is being built atop, and nobody sort of knows what it'll be effective for. But it was pretty evident that it was going to be a very impactful set of technology. And so it was really exciting. And then there's just the notion of sort of provable digital ownership or digital scarcity. It's a fascinating concept. And having worked in kind of infrastructure and servers and hosting for so many years, really called to me. It made a lot of sense. And the possibilities of what you can build with that type of technology, there's so many, and that's kind of the exciting piece. So long way of saying, I spent 2017 going down the rabbit hole, and IBM came back at the end of the year and determined there wasn't money to launch the accelerator. And I knew I wanted to do something in this space. Ironically, I think it was Q3, the end of Q3 into Q4 that I started to apply to a bunch of exchanges. I thought, oh, maybe I'll go do product management at Coinbase or Bittrex. And if anybody remembers Q4 of 17, like the exchanges were all literally on fire. And I couldn't get anybody to call back because they were just trying to keep the things afloat. So through that period of time, I began to form this thesis around sort of how these markets behave. And one of my key beliefs is that these markets really struggle from opaque fundamental value. So if we look at equities, we look at the stock market, there are valuation models that you can go take that sort of generally are accepted. And you could say this company should be worth sort of this within this range, and whether it's earnings per EPS or sort of balance sheet values, or you can generally get a sense of if you think something is overvalued or undervalued based on kind of a common model. And certainly there are plenty of things in traditional equities that don't fit that model, but generally speaking, sort of that there is a sense of the shared valuation metric. And that doesn't exist in crypto. Like there is no shared valuation model. Like the reason I believe Bitcoin is worth something and you believe it's worth something are probably pretty fundamentally different. And we can't point to a set of metrics, particularly in sort of 17, to say, oh, based on this, the network should be worth that. And so my thesis was, if that is accurate, that most of the price action in this entire asset class, it's behavioral nature. It's fear and greed that move these markets, sort of that fear of missing out. And if that was the case, then the thesis was that those are behavioral patterns that manifest themselves in price data. They're sort of repeatable. Because most price data is sort of random and noisy. But if that price action is being driven by repeatable human behaviors, that there should be an opportunity to go identify those in that data. And then the thesis was we could use those patterns to write algorithms to trade the asset class. So sort of nights and weekends at the end of 17, started writing software to go pull down data from exchanges and normalize it and store it and look for those patterns. And by the end of the year, got to a set of a tech stack that felt like something was working and felt like it might be worth making a go of this. So it was actually 3 days after the 2017 Bitcoin all-time high. that I called up Sadie Rainey, my now co-founder, and said, I've got this idea. Do you want to go give this a go? And so we started a company called Strix Leviathan in January of 2018. And the observation then was sort of twofold. One, there was this opportunity with algorithms to go build effectively a hedge fund to trade the asset class. And two, there was no infrastructure. There's no software in the space for people doing sophisticated portfolio management. So if that was accurate, then the belief was we could build that set of software and we could run a fund on top of it. And sort of one of those two things would work out. Either the fund would be successful or there'd be an economic opportunity with the software. Sort of fast forward now 4 years, turns out there still is no economic opportunity for that underlying software, but the fund has done phenomenally well, and been delighted to see sort of its growth. If you back up then to August of 20, we've now been running the fund and the software company for 3 years. The fund itself was doing well. We were very happy with the returns and sort of what we were attempting to achieve, but we had the hardest time fundraising, which I think is just a fascinating, it's a challenge, both being in this asset class and then being in this asset class in Seattle. I think we looked at the most successful funds, and they were New York, they were LA or San Francisco, they were Puerto Rico, they were Florida, they were not in Seattle. And so kind of getting in front of the right people who had interest. And I think the other interesting thing is that the funds that we run, really the objective, we think about it as defensive crypto. Like, I'm not trying to outperform Bitcoin in the short term, or the fund's not trying to outperform Bitcoin in the short term. My thesis is that all of this is one giant experiment, and it's all software. And having been in software for my entire life, I can tell you software is invaluable. And like there's no way to say that this thing today can be the end all be all asset, that Bitcoin today could be the end all be all asset that will survive forever in the future. And so my thesis has been, let's run a fund that evaluates the widest breadth of assets that we can, and really isn't aligned to sort of the success or failure of any single one. And that really is about sort of downside protection more than pure upside capture. So the thesis was these markets go through cycles. If we can capture the bulk of the upside and a fraction of the downside as these markets go through those cycles, that in aggregate over the long term, that will provide a better return stream than an investor who may have greater appreciation in a bull market, but lose 80% of it in a bear market, only to have it sort of rebound in the future. Like I personally am not comfortable with watching a significant portion of my net wealth devalue by 80%, hoping that it comes back in the future. There's plenty of people that are, and bless them, because they make this asset class stronger, but that's not me. So anyway, so at the time, the fund in August of 20 didn't have sufficient AUM to make it sort of a viable long-term business. And so we looked at our technology stack and we said, there's really something interesting here. What else can we do with this that would solve problems in the market? And one of the things we'd really come to recognize in all the sales conversations we'd had from 2018 through then was that for almost everybody, this asset class, it's too hard. It's intimidating, it's unapproachable, it's confusing. And for many people, it keeps them out. Like, I think a lot of people look at it and they say, I just don't understand it. I can't participate. I won't participate. It's like today you go on Coinbase and you sign up, and now you're given a list of 65 oddly named things. Many of them are named the same thing. You have no idea what any of them are. And you said, now go pick and choose. Like, this one was up 40% yesterday. Like, how is anybody who doesn't have time to go spend understanding the broader space supposed to understand those well enough to make sort of an informed, intelligent decision? So realize sort of that's the problem. Most people, so CNBC 3 or 4 months ago did an article that said 1 in 3 people don't understand what they're investing in this asset class. And I think that's actually low. I think probably 2/3 or more don't, right? And it's just confusing. I mean, you look at some of these new projects that come out, we're in the space all day long. I couldn't tell you what some of them are, just based on how fast things change. So we looked at that and we came to recognize, like, what this space is missing is effectively mutual funds. Like we need some simple product that provides diversified exposure to the asset class. So not just a single asset. Like I think a Bitcoin ETF, that's fine. That makes buying Bitcoin easier for certain people. I think there's a bunch of negatives around a futures-based Bitcoin ETF, but it's fine. Like it makes it easier. But that's not diversified exposure. You're now taking a bet on a single asset when this is an asset class, and I think will continue to be an asset class. And so we looked at our tech stack and we looked at that reality and we said, what if we could build the equivalent of mutual funds without having to structure it as a mutual fund? And that was the genesis for the Makara idea. So we started on this in January of 21. Our objective was to be an SEC registered investment advisor. So we went through the licensing process and received our license at the end of March. And using that license and using our technology, really the goal was to provide a simplified experience for investors that are beginning their journey in crypto to be able to confidently allocate into the breadth of this asset class above and beyond just Bitcoin. Spent much of the summer getting the MVP platform built. And it turns out this has been extraordinarily harder than I think we anticipated from a technology perspective. Primarily building kind of the underlying infrastructure to support separately managed accounts. So a mutual fund is unique in that it's a pooled investment vehicle. So you put money into a fund, and it's literally a fund as in the name. And sort of everything is done in one pooled structure. What we wanted to do was provide a similar experience, but do it in the construct of separately managed accounts so that when a client subscribed to our construct, which we call a basket, you're not buying shares in a basket. The basket is not a fund, but you are getting the underlying holdings of that basket bought into your own personal portfolio, your own separately managed account at our custodian. Sort of building all of the technology to do that effectively and with sort of the rigorous data standards to ensure kind of all of the accounting is done correctly. Like that's been a harder challenge. And I think we anticipated going into this in January. We launched the Makara app, the beta in May to friends and family. And then over that time built about a 39,000 person wait list, which felt to us like, okay, this seems to be a problem that people are looking for a solution for. And then we launched publicly in July and opened up the product to anybody anybody who wasn't on the wait list in August, and have been rolling ever since. So that brings us to today. So today we've got Makara live. We've got 7 or so baskets on platform. We've got about 7,500 registrants on the platform, and we've been delighted to see the response. You know, I think that the most exciting thing to date just has been the excitement around the product. If we look at sort of our client satisfaction scores, like 92% client satisfaction, I think 90-ish% app store ratings. But most exciting to me, we have 46% of our clients are making repeat deposits, which tells me that like we've solved the problem. Like this is working for them, and they're excited by it. So it's been quite the journey. You know, we're excited to see sort of where this Makara product takes us over the coming years.
Yeah, that's like serious. Lots of moving parts, I would assume, and I mean, you're definitely not someone I call a faint of heart. So you can definitely weather all the sorts of things, especially with your experience. So it's amazing. I'm going to open it up to the community. Does anybody have questions you want to jump in with in terms of, you know, getting on video and asking Jesse directly, or in the chat? Oh, Brian's ready. Hey, Brian.
Oh, hey, Arry. Hey, Jesse. Thanks so much for taking the time to talk with us. Really appreciate it. I wanted to talk more about data normalization. So one of the things that you talked about was when you were first building this was you had to like take all this data and then clean it and normalize it to try and find some way to derive like a meaningful insight. And I looked at the Octopus software that Strix had, and it's really incredible the way that data flows in real time. And I'm really curious to learn more about that software and the process you went through to build it.
Yeah, absolutely. So I think anybody that starts trading on multiple exchanges, and particularly sort of trading via APIs, the first thing they come to recognize is that for the size of asset class that this is, and for the amount of money that flows through these exchanges on a day-to-day basis, the state of the actual infrastructure is horrifying. Like these exchanges, the APIs themselves, they're poorly documented, they're not well implemented, they're unreliable, and they lack sort of consistent data formats. And so the first big objective we set out to do was build a set of tooling to go collect data off of all these exchanges in real time. And that technology internally we call SailFin, and it's effectively a mechanism to go subscribe to all the different exchanges that we have connectivity into, to connect to their trading feeds, and then to do that normalization. How do we take everybody's peculiar data format and put it into a structure that is consistent, that we can use within our platform, and then archive it, and then in real time sort of use that to construct effectively our pricing and volume references for what's happening in the markets. And so we started by collecting that from a time basis. So we collect every individual match that's happening on all these exchanges, and those get coalesced into sort of 1 minute candles. And then those candles can be abstracted at other periods of time. And then we came to recognize that ultimately in these markets, time has very little to do with anything. And if you've been here for a while, you'll come to recognize this. Like, it's a bit like boating. You know, there's a saying in boating where it's like hours of boredom, moments of sheer terror. It's the exact same thing that happens here. And you go back to May of this year or March of last year, at the particularly big sort of futures-driven sell-offs, and you come to recognize that sort of these massive movements happen in very short durations of time. And so what ultimately we decided was a more important way to evaluate these markets was based on effectively volume-driven candles. And so we wrote a set of algorithms internally that builds effectively a genetic algorithm to decide sort of how to slice these markets so that we can attempt to get sort of a consistent number of candles per period. And what that does is that in events like May or of this year or March of last year, an event that happened over the course of 15 minutes or an hour that may usually only get, one candle, or it might only show itself in, 4 15-minute candles or one 1-hour candle. With these volume drive candles, or what we call cash candles, they end up manifesting over a significantly higher number, so 20 or 30 or 40, as a function of sort of the big deviation of the market. So it's just a way to gain a better understanding of what's happening from a flows perspective than pure time bars. And sort of all of that capability was derived off of the fact that we had kind of that raw source data coming in from SailFin.
Can you quickly describe what is candle for those that aren't familiar with the language?
Yeah, absolutely. So a candle is effectively a way to represent what was happening to the price of an asset over a period of time. And so it's an open, a low, a high, and a close, and typically a volume measure over a period of time. So a 1 minute candle, the open price would be the price at the beginning of the candle. The high would obviously be the highest traded price in that period, the low, the lowest, and then the close would be the last price at the end of that period. And then volume is a summation of what was traded during that time. And those candles can be any duration. They could be 1 minute, 15 minute, 6 hour, 1 day, 1 week, 1 month. It's sort of irrelevant, but it's a way to visualize and to sort of build a consistent structure around the underlying data in the markets.
Crazy. Did I answer your question, Brian, or do you have a follow-up?
Yeah, thank you so much. Yeah, that's a really hard problem to be able to take all that data and to put it into a format that can be used, and then to build software on top of that. It's a really great technology. So thanks for describing. I appreciate it.
Yeah, the other interesting piece there. So we've historically been doing everything on trade data, so matches themselves. Over the last number of months, we started to do more and more with order books. And you start to look at the actual amount of data that flows from these order books. Like Coinbase is, if you track all of Coinbase's updates on a month-to-month basis, it's like 7 terabytes a month of raw data just coming in over the wire. So it's pretty fascinating to see how much data exists here. And the interesting thing, just on that note, is like we ran into so many investors originally. They're like, "Oh, it's a blockchain. Like all the trade data is it's on the chain. Like you can just read it off of the blockchain." And it's like, "Oh, I like actually no." The vast majority of this happens in these centralized exchanges, and that data, while public, is certainly not archived anywhere. So, kind of an interesting problem set.
How do you store, like with a massive, with 7 terabytes? How do you store that? Like, how do you process it? Where is that all happening?
Yeah, it's all we use Amazon for everything. So we built a whole data processing queue that all sits atop Amazon.
Are you happy with them?
Yeah, it's been great.
Yeah, I bet your super back-end infrastructure know-how and expertise has been a super leg up in this field, Jesse.
I'm certainly not the guy creating the algorithm, so it's good to have some skill that's useful.
Can I follow up on that?
Yeah, Marina, your connection's a little bit weak. If you want to type it in, I can read it off.
Yes, I'll type it up.
Okay. Well, Marina types her question. We have a question from Flynn and Jesus. So let's go to Flynn, and then we'll go back to Marina, and then we'll go to Jesus. All right. So Flynn, question.
Great. Thanks, Arry. Thank you, Jess, for being here and sharing the exciting story that you have. So I do have a few questions. I'm going to ask all of them all at once, if you don't mind. So first is, so who are you specifically targeting? Are you targeting the individual investors at the moment? Are you focusing more of a B2C at the moment, or will you be going after maybe B2B? Because I'm thinking more of a scalability. How do you grow your business? How fast can you grow? So that's question one. And question two, I mean, how do you market yourself? Because I mean, you said you have quite a few people waiting in line, wait list. How did those people find out about your company, your products at the beginning? And as you grow bigger and bigger, how do you market yourself? The third question is, what is your business model? How do you make money? I was just curious. And do you make money through a asset management fees or transaction fees, or what kind of a model you have? The last question that I was thinking of is, are you doing any fundraising in order to increase your business? Are you having better luck now than before? Because earlier you mentioned something about you had an easier time with people in New York rather than the Seattle area. So thank you so much.
Yeah, absolutely. So I'll do my best to remember these and go in order. So I think first was client, who are the customers? So on the Makara side, our thesis is that the target client is the working professional. So this is primarily somebody who's short on time. I think my neighbor who's a doctor is a perfect example of this. So this is somebody who knows what this asset class is, has heard of Bitcoin, has heard of Ethereum, but has not had the time and is not interested in spending the time to go dive in and understand all the nuances of the asset class, but wants to be part of sort of investing in the future. Like that's how we think about it. And so by creating these baskets, we're allowing somebody who is short on time but has interest the opportunity to participate in sort of whatever sector of this asset class they're interested in, whether it's all of it. Sort of our S&P 500 equivalent is the universe basket, which invests in everything we have access to, or it's a segment like Web 3.0 or DeFi, or we're working on a metaverse basket right now, or a specific asset, like maybe they're only interested in Ethereum. We wanted to just simplify that experience down to concepts that people already understand. Like I can go in the stock market and I can go pick a thematic ETF, banking ETF. I don't have to understand sort of all of the nuances of the banks underneath. I can just know that that there's a firm that has selected assets that meet sort of a qualification threshold. So that's what we're trying to create the equivalent of. And ultimately, I think, the ETFs this week are a great example. People are like, aren't you worried about ETFs? Like what we have today is a Wall Street plastic wrapped offering around another Wall Street derivatives offering on top of sort of technology that's designed to replace all of that. So it's stunning to me that it attracted $1 billion of inflows. It shows the demand that's out there, but it's a terrible product. And if that's what the SEC is willing to approve, and I'm thankful that they're willing to approve that, but if that's what they're willing to approve, the thought of them approving sort of thematic ETFs, it is a long way out. And then on top of all that, this asset class is 24/7 and incredibly volatile. And these ETFs are 9 to 5 banker hours traded products. So
yeah,
like those aren't compatible characteristics. And then lastly, like we're talking about technologies that are designed to replace this system. And our thesis is that people investing here should hold the underlying asset. Like you shouldn't hold a share of an ETF that's investing in a derivative. You should hold Bitcoin
Right.
if you want to hold Bitcoin. And there are simpler ways to do that than this existing ETF model. So again, like when a client at Makara comes in and buys a basket, they're holding the assets in that basket. And we think that's an important part of the product. So that was client. 2 was revenue model.
Marketing approach and go to market as you scale.
Yeah, how do you scale your business? Because are you focusing at consumers at the moment, or will you? I mean, sometimes I was thinking, in order to grow your business faster, you might have to work with other, asset management companies or other, banks or institutions to scale your business. Yeah.
Yep, you nailed it. I mean, I think we've thought about this as a 2-part play. So if we had started this company and said, we're going to build a platform that we're going to sell to banks to allow their clients to invest in crypto, we would have gone out of business far before we ever got our first client signed and before we ever had anything built. So the thesis was, let's build a direct-to-consumer app that allows us to validate that there is demand for this product, that allows us to collect product feedback, to build the feature set that people want, that allows us to iterate and adopt as the market changes and really interact with our clients. And while we're doing that, let's go build relationships and ultimately sign distribution partnerships with existing banks and distribution firms. So that again, like if I'm Goldman, do I want to tell my clients to buy, particularly the kind of the Marcus style clients, like the clients that are here buying robo-advisory service already, do I want to tell them to buy sort of this terrible synthetic ETF, or do I want to tell them, here's a simple way to gain access to this underlying asset class and actually participate? And so what we've seen is that there's definitely institutional interest there. We're in conversations with a number of banks, asset management firms, even crypto exchanges that are looking for simpler ways for their clients to gain access. But the reality is all of those conversations just take time. And so while we're conducting those, ultimately we use the direct to consumer model as a way to continue to build and innovate the product. Third question was revenue model. So it's threefold. So we charge an annual management fee on AUM. And so it's 100 basis points or 1%. And if you look at the like Grayscale product line or the Bitwise product line, typically they're 2.5%, 3%. We then, we do not charge transaction fees directly. So if as orders are executed, they go to our custodial partner and executed on the exchange. So we're working with Gemini. So those fees are passed through. But the way the product works, orders are executed during a trading window. So it's a once a day window where everything gets bought or sold. And in that window, we have client orders that cross. And if client orders cross, we can get clients a better price than going to the exchange. And if we can do that, we can take sort of a portion of what we've saved them and earn that as a fee. So the client will get better execution and we can earn a revenue stream from there. And then the third stream that we have is effectively a licensing fee back to the original Strix Leviathan business using the software that we've developed to run that fund vehicle. So sort of 3 sources of revenue. And I think the fourth question was fundraising. So something fundamentally changed with interest over the course of 2020 and predominantly towards the back half of 2020 and certainly Q4 of 2020 in a material way. So we have I think we've 6 or 7x the fund in terms of subscriptions. So not returns, right? This is subscriptions, net new capital coming in the last 12 months. And it's from a sort of a different allocator. So the original investors in the Strix vehicles, we referred to ironically as friends of Jesse. They were sort of other tech entrepreneurs or folks that I knew within the Seattle ecosystem that just were interested in the project, and that kind of the high net worth investor that was sort of the bulk of our clientele for a long time. The fund is a 3C7 fund, so we can only accept investments from qualified purchasers in that product. So that means an investor who has 5 million in investable assets and up. Over 2020, that started to change and moved into family offices, moved into institutional fund of funds, and moved into foundations. So very different profile of investor, very different check size, very different sales cycle, very different diligence process. So it's been pretty interesting to watch sort of that transformation over the last year on the Strix side. And that business now is in a great position.
Wow, amazing. I can't.
Thank you.
We have a bunch of questions queued up now. So I'm going to go back to Marina quickly, and then we'll catch Adam's follow-up question. So Marina asked, if tomorrow regulators will order AWS to block all blockchain, I guess, transactions, what's your next step?
Yeah, so this is an interesting thing. And this is kind of goes back to my point earlier around what we do versus what sort of people think we do. So we actually deal very little with the blockchain. Like, we don't have any connectivity to any nodes. We don't, like, any of the on-chain data we use, we're collecting from third-party providers. So everything that we base our business on is coming off of APIs from centralized exchanges. So we have very little concern around sort of the regulatory reality of the underlying chains themselves. Now, certainly that regulatory pressure has impacts to price. So there are considerations there that we're mindful of. But we're not dealing with kind of the underlying networks themselves. It's more for us a data play off of the exchanges themselves. And I mean, ultimately, there's nothing on Amazon that we are using that we could not replicate sort of in our own infrastructure with enough time. We've just elected to use their services for simplicity. So if that occurred, we could certainly stand everything else up on our own hardware and keep on trucking.
That's true. I believe it too. Adam asked, are the baskets you mentioned permanently fixed, or can the underlying tokens, which tokens and what percentages change?
Yeah, good question. So these are, we think of them as today, of the baskets that are ranked today, they're all passive indexes. And so they effectively each have and they are all systematically set. So there is a market selection criteria, and then there is a rebalancing criteria for each basket. And if you go through the app, you can see kind of on each basket what those are. From a market selection perspective, that will be defined. So for the Web 3.0 or Metaverse or DeFi basket, we're looking for certain characteristics of tokens to be included in those. For the universe, it's obviously every token. We have a blue chip basket, which is the top 10 largest assets by market cap. So those markets are effectively decided systematically. And then each has effectively a rebalance mechanism. So all of the baskets that are live today rebalance on a quarterly basis, and each then has a target allocation. So the universe is sort of the odd basket out. It's using an algorithm called risk parity to determine its weights. And risk parity weighting is designed to sort of equalize the potential impact or risk that each individual asset has on a broader portfolio. So you'll have effectively smaller positions in more risky assets and larger positions in less risky assets, which is a little bit of a misnomer given sort of everything in this asset class is pretty risky. But it's a good way to sort of build some build a little bit more intelligent allocation mechanism into the portfolio versus equal weighting across everything. Everything else running today is using an equal weight allocation. So once a quarter, it brings everything back into equal weight alignment. And then throughout the quarter, obviously the weights will drift until it gets rebalanced back. The next set of baskets beyond Metaverse that we're bringing to market are actively traded. So these are leveraging algorithms that we've built from the Strix side of the business to actively trade funds within those baskets. So instead of waiting for a sort of quarterly period of time, they will trade more frequently. Given that these are separately managed accounts, there are things we're constrained to some extent into what level of sophistication we can get with the algorithms. But the design objective here is to provide a basket really with a different return profile than just a passive holding that's going to sort of match what that market is doing or what the markets are doing. So I think the first one coming online, I believe, is called the Dynamic Duo, and it's a Bitcoin Ethereum relative value basket. So algorithms that are effectively weighting a portfolio heavier one direction or the other. So you're holding more Bitcoin or more Ethereum or potentially a larger cash allocation based on what that algorithm thinks the markets are about to do. So as we've seen, sort of Bitcoin often outperforms Ethereum, and then Ethereum outperforms Bitcoin sort of at different periods of time. And so if you can time holdings correctly, you can benefit from that difference. And then the second one that's still in development is more of a defensive crypto basket that is targeted more to reduce drawdown than to optimize for gross return or max return.
I have a question, and you may have heard it from my dear husband. But are you going to be releasing custom baskets where like we can put in our own basket the items that we want, and then put in our own allocations and percentages, and then just do the dollar cost averaging a certain amount every week or month towards it, and then tweak it ourselves? And then what would be really cool is if you could like make public these custom baskets, the top 10 that are performing well, and you sort of have like a crowdsourced experience around it. But we definitely want the custom baskets. Is that possible?
Yep. I mean, anything's possible. It's software. It's definitely something that we've thought about, and it's on roadmap. I think part of our initial challenge is if the thesis here is that we're welcoming sort of a net new participant that is not familiar with the space. We really, the entire design consideration was how do we make this as simple as possible? And so some of the other providers that are doing similar offerings to what we're doing, like they're basically algorithm stores where you can kind of go browse dozens or hundreds of these algorithms. And if you don't understand the asset class to begin with, or the complexity here, like trying to pick and choose between algorithms with horrifying names, like it's not going to work. So that was kind of the initial design consideration. I definitely think there's an avenue because I think there's an avenue for that type of product, right? Because somebody is going to get started in this asset class, and then they're going to learn more, and then they're going to want to be able to sort of pick and choose their own things. And so really we'd like to be able to grow with our clients as they grow. So it's definitely an area that we're thinking about, and just how do we do it in a way that is that meets our design considerations for simplicity. That's still kind of the consideration we're going through. But it's queued up. We've got some additional sort of what I would consider basic or MVP functionality that we need to get in the app, and then we'll start to think about sort of the next generation of capability to add like that.
Cool. Okay. Well, we'll be on standby looking for the custom baskets. Brian, I had another question, unless someone else who hasn't had the question wants a chance to ask questions. Jesus, Erwin, Brigitta, Ken, Sean, Zaf, Susan.
I had a question.
All right.
What's the onboarding process for both personal and institution? I know that there's quite a wait time if you're trying to onboard a company account, and then the other is, can you talk a little bit more about how big the size of your company is, and how many people are involved, and where it's at today? And then what would be, I know the difference between going with the Coinbase or Gemini would be that you select your individual coins. You have to do the research on the companies. with you, you're doing most of that, all of that legwork, and you don't have to be so involved. So, and then part of that onboarding is if we're selecting the baskets, do we actually talk to someone, or is it just all done through the app? How does that work?
Yeah, absolutely. So onboarding for individuals is super simple. You download the app. It's about I think it's 6 minutes or so to go through the process. So because we're a regulated entity, step one is effectively KYC. So take a picture of your ID, take a picture of your face, and away you go. Basic profile setup, name, address, phone number. We, as a registered investment advisor, require you to review and sign an advisory agreement. So it's sort of a terms of service. And then your account's established. So it's very simple. Following that, you can complete a survey. So we ask about 6 questions or so about your interests, your experience with the space. And from that, we make a set of recommendations for baskets that we think you may be aligned with. You pick your baskets, and you can build a portfolio of up to 4, and then you can make a deposit. And today you can fund with Bitcoin, you can fund with Ethereum, and we have connectivity with Plaid to do ACH bank transfers through their network, and then wire transfers are also supported. So pretty quick process. I think we've been sort of timing folks. It's about 9 or so minutes to go from initial onboarding through basket selection through funding for the people that kind of rip through it in one quick step. And we're pretty happy with that process. Certainly, if anybody has feedback on how to make it smoother, we're always open to it. Institutional accounts, there shouldn't be a wait time. It's a similar process, although it's not done in app. So there is an institutional form that Gemini requires that we have you fill out. So Gemini is our qualified custodian on the back end, and they're who secures all of your assets. So we collect a few documents, open the account, and then you have normal access to the app once that's all completed. So that should be a pretty simple onboarding, and I believe there's a link to get started there within the help section of the Makara website. I think the second question was team.
Yes.
So we're about 25 people or so today. Very distributed team. We've got 5 or 6 of us in, or maybe 8 or so in the sort of Pacific Northwest area, Colorado, North Carolina, Midwest. We've got people in Europe. We've got, it's a very distributed team. So it's sort of COVID had little effect on us in terms of how we work. And then, pardon me, I forgot your last question.
No, that was it. I have a follow-up question. If you're using Gemini, so because I tried to open an institutional account with Gemini, and it's been 4 weeks, and they still can't process the paperwork. So I tried it with Coinbase. That's going on 5 weeks, and Kraken was able to do it in 2 days. So. Yep. So if you're using Gemini, is that like the time frame that it's going to take? Because we're usually beholden to their review, and I think they must be extremely busy because it does take. I mean, it is going on 4 weeks now.
Yeah, we are beholden to the review, although our relationship with Gemini sort of affords us a sort of a top of the list perspective. So we've certainly, the majority of our individual applications get instantly enrolled at Gemini. A few of them require manual review. That manual review typically occurs in 24 hours. Over the last week, given the all-time high, we've seen that sort of stretch out to 48 or so. But we have a relationship there that allows us to sort of expedite much of that. So I would be happy to work with you to see if we can get your application through. I would not imagine it should take weeks. I've not seen that to date with any of our clients.
Okay.
Cool. Thank you, Jesus, for great questions. Brigitte has her hand up.
Hi, yes. Yeah, thanks. This was really, really great, Jesse. Just to piggyback with the last individual, I also had a tough experience with Gemini. It was my first my first foray into Bitcoin, and they lost a bunch of my money, which I'm hoping isn't the case anymore. I'm sure they're treating you really, really well. But I liked everything I heard from you. And then when you said Gemini, I thought, oh no, not Gemini.
How do they lose your money?
Well, it was really strange because it was one of those times where when I had used them, the max was $500. And then the next thing I knew, I had $15,000 taken out of my account. And I go, well, how did that happen? So the hacker had taken my account and immediately moved me from 500 to 15,000 at a time when there was nothing in the market that was suggesting people should change their behaviors.
And then withdrew it.
And it was 2 years after I had opened my account. Like I didn't even realize that my ACH was still open and available. Yep. And trying to get them to say, hey, listen, it wasn't my device. It wasn't my location. It wasn't a behavior that, just lots of red flags. Yep. That all lined up to say, this is not the same person, 500 to 15,000 at a time when there was nothing happening in the market to suggest people should change their behaviors. And there was like very, very little and no help from Gemini. Right?
Yep. And so did that person then withdraw that in crypto?
Yeah, they do that. And I actually had to, hard wrestle my bank to even close the account because they said, oh no, this is a valid transaction. I go, no, it's not. And so it was interesting to me how hard it was to actually shut down my account, because I knew if 15,000 was out, then within a little bit of time, another 15,000 was going to go out until my bank account was dry, right? So closing my account and dealing with this was remarkably difficult. And to this date, nothing has been resolved. And it's, over, I think it's almost 2 years now. And so I was just thinking how hard this is. So of course I'm not happy to deal with Gemini, but I'm assuming they've ironed out the kinks and provide you with amazing service based on the kind of business you're offering them, as opposed to me with $50,000.
Yeah, I think that's that story. That's the hardest part, I think, about being a crypto exchange, because I think they're in a no-win situation, right? If they put holds on funds, people scream because they can't get their crypto off. And if they don't, we hear stories like yours where people get exploited as part of security holes. So, I think one of the really unique characteristics of Makara, and one of the things that we've really tried to make clear, is that we're not an exchange. This is not a place to sort of buy and sell crypto. Like if you want to buy Bitcoin and go do something with it, there are dozens of venues that you can go do that with. If you want to invest in crypto, that's what Makara is for. And so we have sort of additional levels of security precautions on top of deposits. For example, like in your instance, there's a 5-day anti-money laundering hold on any capital that comes in platform before it can be withdrawn to crypto. And sort of that type of experience helps us prevent sort of the story that you're describing.
Yeah, and I think that's really helpful because the vast majority of people are like your neighbor who they want to invest. I mean, even the people buying Bitcoin are not using it to transact. They're just buying it to invest. Right? Yeah. And so I think your model is a much safer model. I was just saying how is way too cavalier with the way, Gemini had all sorts of stuff all over its website saying how safe they were. And clearly they were the new up and coming group. And then, it didn't turn out the way I had hoped. But,
the other key point is that Gemini acts as our qualified custodian, but our clients have no interaction with Gemini. So the experience is through the Makara app. You interact with the Makara client services teams. So Gemini is effectively our underlying service provider that's a requirement as part of our SEC registration. Versus like you don't need to go sign up for a Gemini account and then provide us sort of access or keys or anything. We handle everything. The experience is entirely through us.
Yeah, I think it's a much, much better model. Very nice. Thank you.
Awesome. So we're about out of time. Jesse, to close up, closing remarks, and then what are the best ways for people to get in touch with you, follow you, all that good stuff?
Yeah, well, I appreciate all the questions. I think one of the things that's been the most exciting piece for us is being out in the community and having these conversations and really hearing that this product solves a need. And whether you're sort of a sophisticated crypto user who I'm sure are getting text messages saying, how do I go invest in this asset class? Like we've designed Makara for you to be able to go give to your friends, or if you're just brand new and trying to figure out how to get started. I think we've really identified a pain point here, and we're happy to we're happy to have solved it. You can follow me on Twitter. I'm just at Jesse Proudman. LinkedIn is also available if you just put a note reaching out. Always happy to connect, so I know who you are, otherwise it'll get lost. And then Makara is just at makara.com or Makara Digital on Twitter.
And then someone asked, would you be willing to share your email address?
Yeah,
Or
just Jesse at makara.com.
Jesse at makara.com. Marina asked, do you use Telegram or Signal?
I do. Everything gets lost there. There are so many chat services. I can't keep track of all of them anymore. And so people message me on Telegram, and it takes me 3 weeks to get back. Honestly, email or Twitter are probably the two best mechanisms to at least get started, and then happy to find a venue that works.
All right. So Twitter, Telegram, find Jesse there. Thank you everyone for joining us. Thank you, Jesse, for spending the time with us and giving us insights into your journey with Makara. And all of us, we should go to makara.com, check it out, download the app.
And we're launching in THIS today, version 151, which includes the referral link capability.
Ooh.
So we're working on that, but that'll go live today. And it's a 40. You share $40 with your $40 worth of a random coin with whoever you refer. So we're excited to get that out. There's been a lot of demand for that feature.
Ooh, it's a little bit of a lottery too.
Yeah.
Awesome. Well, thank you, everyone.
Yes, I put it in the chat.
It's at Jesse Proudman, JesseProudman on Telegram. Thank you, Jesse Proudman of Makara. Thank you, everyone, for joining us. And we'll hopefully see you next week. Have a great weekend and happy Friday, everyone.
Thanks so much. Great to speak to you all.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again and enjoy the show.
What are you doing?
Stuck inside.